Good morning, ladies and gentlemen, and welcome to Cris-Tim Family Holdings conference call, where we will be presenting the consolidated results for the first 9 months of 2025. Before we begin, please note that this call is being recorded and that the recording of this call will be made available on Cris-Tim website this week. By joining the video conference, as indicated in the call invite, you automatically and implicitly consented to being recorded. If you do not wish to be recorded, we kindly ask you to leave the call. I would like to mention that we might be making forward-looking statements today during this teleconference and that the actual results of Cris-Tim Family Holding may differ materially. We encourage you to review the disclaimer included in this presentation, which you can see right now on your screen. This disclaimer applies equally to all statements made in today's call. Thank you for your attention. We can now begin the call. My name is Zuzanna Kurek, and I'm Investor Relations Manager at Cris-Tim Family Holding and your moderator for today. I am joined today by Radu Timiș Jr., Chief Executive Officer of Cris-Tim Family Holding, and Răzvan Furtuna, Chief Financial Officer. Regarding the structure of this call, let me walk you through the setup. First, Radu Timiș Jr. will deliver the opening remarks, highlighting key financial and operational KPIs and the progress made on the investment project. Following that, Răzvan Furtuna will present a detailed overview of our financial results. Once the presentation concludes, we will move to the Q&A session. Please be aware that all the participants are currently on mute. If you wish to ask a question, please type it in the chat window, which will remain open throughout management's presentation. I will be moderating the Q&A session, and for the benefit of those watching the replay of this teleconference, I will read each question out aloud before it is addressed. Your questions today will be answered by Radu Timiș Jr. and Răzvan Furtuna. Thank you for your patience, and now we can officially kick off the call, and I would like to invite Radu to share the opening remarks.
Ladies and gentlemen, good morning, and thank you very much for your participation. I'm glad to present to you today the key highlights of our evolution in the first 9 months of 2025, compared to our evolution of 9 months in 2024. First, I'd like to focus on the segment evolution, which we have recorded in the first 9 months. In the category of cold cuts, we have recorded a growth of 5% year-on-year, which represents a figure of 34 million RON. This confirms the resilience in the market, which has seen very small increases in the first 9 months of the year. The ready meals category has recorded a growth of 21% year-on-year in revenue, which represents 15 million RON increase. A very positive increase compared to last year, showing that this category, as mentioned before, continues to have a double-digit growth annually and is a category of the future. Nevertheless, we have seen the highest growth of revenue out of all our brands on Matache Măcelaru. This is our premium brand. It's our second brand in terms of growth and volumes of our cold cuts portfolio. This brand has recorded a 20% increase in revenue for the first 9 months of the year, and we are very happy to see it growing in a segment of high-value added value products. All in all, if we look at all the distribution channels, meaning international key accounts, which is comprised of brands and private labels, traditional trade and export, all of these channels have contributed positively to the evolution of our results. So all of them have seen growth in the first 9 months. This supports very well our strategy of a very well balanced out portfolio, as in terms of sales channels as well as brand and non-branded products, private label. If we look at the financial performance of the first 9 months of the year, we see in Q3, first of all, 10% growth year-on-year. This is the greatest growth we've had this year. So Q3 has been our best performance yet out of the first 9 months. As mentioned with other occasions, the first two Qs, we had some projects which were lagging a bit behind and whose results are being seen right now in Q3 and will be seen in Q4. So we have reached revenues of 853 million RON up to date. If we look at the gross margin, it's supported by 4% reduction in raw material costs, which offsets salary and utility increases. Let us not forget that we are very proud of these results in the condition that this year we've had 21% increase in employee benefits costs, expenses, due to the cancellation of the fiscal facilities that have been cancelled at the beginning of the year for the agricultural segment of the economy. And we've also seen a 19% increase in utility costs coming especially from gas. So it is clear that our very tight control on costs and operational discipline has only led us to a growth of 1% in operational expenses in the first 9 months of the year, which is reflected clearly in the EBITDA margin of 16.8%, based, of course, both on operational discipline and the strong product mix of portfolio and sales. This is our highest EBITDA margin recorded yet in the history of our company. If we look at the net profit, we're looking at an increase of 30% year on year, which once again reflects improved efficiency and lower net financing costs. If we look at the Investalim status, this is part of our investment strategy of 890 million RON, which we have announced together with our listing on the stock exchange. The investment strategy for 2025-2030, we are advancing with the investments of 768 million RON in the cold cut segment, and the difference of investment will be placed in ready meal development of a new facility, as well as changing our distribution fleet. The first objective of this investment program is the construction of new frozen storage facilities, which has begun last month. We have 2 weeks since we have started the construction site, and we expect this investment to be completed by the end of Q4 2026. We are also very close to beginning the construction of our new logistics warehouse, the expansion of the current warehouse, which will start at the end of Q1 2026. And we expect to deliver as well by year-end 2026, both of these investments. We remain very committed to the timing that we have planned and that we have set for ourselves regarding Investalim. At the current moment, we are on track to deliver the investment objectives as we planned. In big lines, we are very happy with the evolution of the company at 9 months. We expect that the project we have been planning and working on in the beginning of the year will continue to produce positive results, as we have already started budgeting for next year, our plans ahead. Thank you very much.
Good morning. Going through the segments, we start with cold cuts, basically the most important segment of our operations. Cold cuts delivered 752 million RON in terms of sales, compared to 718 million last year, same period. We have a 5% increase. The contribution is both from volumes and from price. Price increased, average price per kilogram is 3% more than for the same period last year, and volumes are 2%. As already stated by Radu, we had a very strong third quarter. We expect also a strong quarter for the last quarter of the year. Due to some new projects we started this year. The contribution from the brands is 1% increase in Cris-Tim, 20% Matache Măcelaru, as already disclosed by Radu, and the other brands, including private label, 12%. Going through the finally, the result of the 3 months in terms of EBITDA is 122 million RON, which is an increase of 18% year on year. The most important thing already stated, is that we had a very, very difficult start of the year due to the increase in salary. But we managed both from we managed to cover this extra costs both through a better procurement price for raw materials. It's not very big difference compared to last year. It's just 1%, but it's very helpful. And from operational efficiency, we have reached this very good result in terms of EBITDA. On the raw material, on the ready meals, we have an increase year on year of 21%, which comes from 19% increase in volumes and 2% increase in price. Actually, this is the first year since I think 2023 when we managed to increase the price on ready meals due to the increase in cost of the raw materials. Of course, the most important part of the increase in volumes and sales is coming from our own brand, Bunătăți, which showed 23% increase, and private label 18% increase in terms of sales. The result, the 9-month result for ready meals, it's 22.2 million RON in terms of EBITDA, a 9% increase year on year. And compared to the volumes and values, this is because of the fact that it was very difficult to transfer the increase of the raw material into the selling price. We managed to somehow increase the prices for the first time, as I already said, in June 2025. And the third quarter was also strong, very strong, as it was also for the cold cuts. In terms of geographic sales, on the right side of the slide, we have domestic market with 757 million RON, a 7% increase versus last year, and export almost flat. Again, export, it's reported based on our management reporting, which includes some companies which are exporting, some local players which are exporting. On IFRS, you'll see different numbers. Domestic revenues by channels, we have a 7% increase in traditional trade. We have 9% increase in private label and 7% increase in international key accounts brands. All three channels are performing well. The most important thing is that traditional trade, which for the last year showed some sort of decrease, limited, a marginal decrease, this year showed was quite strong and showed that there's still potential in traditional trade. In terms of breakdown by channels, there are not so many differences between last year and this year. Basically, from 41.4%, ICA brands, international key account brands went to 41.6%. Private label increased by 20 basis points. Traditional trade, it's the same, and export decreased 50 basis points. Revenue breakdown by operating segments shows that we have cold cuts, as already discussed, increased 5% compared to last year, and 21% ready meals. Compared to last year, we have a significant change in terms of operations related to dairy business. Basically, this is where the 70% decrease in the other segment is coming from. Basically, starting in 1st of January, we decided to change the way we are operating the dairy business in relationship with Ecoferm, which is a company, a related company. We are currently distributing, and we are actually operating based on logistics services. So we are not directly buying and selling the products, but we are just acting as a logistic and distribution agent. So this is why we are not registering the value of the goods in our accounting. So you see also in the next slide that raw materials and merchandise costs are decreasing also because of the fact that we are not buying and selling products from Ecoferm. This, in terms of EBITDA, cold cuts increased 16% from 103 to 122. Not 16%, sorry. The EBITDA margin is 16% compared to 14% last year, while the ready meals 20 million last year, 28% EBITDA margins, and 22 million this year, and 25% EBITDA margin. Overall, we have a 144 million RON EBITDA, 16.8 margin, as already was disclosed by Ron. So in terms of costs, we have a 4% decrease in raw materials and merchandise cost. I already talked about this. Basically, there are, of course, other raw materials which helped to reach this -4%, but most of the difference from the 507 million to 486 is coming from the dairy business. Also, we have to bear in mind the fact that the volumes are higher than last year. So in terms of price per unit, per kilogram, the cost of raw materials is lower than in 2024. Employee benefits up 21%. Both coming from most of it is coming from the cancellation of the facilities, which was done 1st of January, was announced in December last year, and implemented the 1st of January. And also marginal higher headcount, but really very small impact from this side. Depreciation and amortization 6%, third-party services -9%. This is coming mostly from advertising spending, which was lower than last year, and also from the transportation services, which last year was provided by another company. Now this year we integrated these services in Cris-Tim Family Holding. So they are not shown here anymore. Other operating costs, lower repairs and maintenance, but other costs were a little bit higher, almost flat compared to last year. In terms of net debt, basically end of September, we were at 377 million RON. Compared to end of 2024, it's 45 million RON higher, but our operational model related to raw material is actually based on financing stocks. So normally during the year, especially mid of the year and then the quarter, looks like we are more leveraged, but it's a net debt to EBITDA of 2.6, which is normal for us. And this graph doesn't show, of course, because it was September, the new situation, which is completely different, starting with the end of November, after the successful offer we closed. Equity ratio 33%. It's similar to last year, nothing new here.
A few more words about our growth strategy and our investment program. I was talking before about Investalim. So this plan spans from 2025 to 2030. If we look at the most intensive year of investments, we are looking at 2025, 2026, 2027. There is a split there between the investments in the cold cuts category and the investments in the ready meals and other products we are producing. Out of this 505 million RON project, 45% is, as mentioned before, state aid backed, and this targets clearly capacity expansion and factory upgrades. Ready meals investments is a separate investment from the Investalim program. There we have already projected and designed a new facility, greenfield facility of production at our main platform in Filipești de Pădure. As mentioned before, basically bringing all the production of the group into one single production hub, as well as one single logistics hub, will bring to us great efficiency in terms of production, in terms of cost per kilogram, indirect costs, manufacturing costs. This is very important for the long-term perspective of the company of growing, developing and entering into new product categories, as well as maintaining a very high profitability. Once again, the purpose of all these investments is to automatize as much as possible all the production of the group, and at the same time reach the efficiency that will allow us to become competitive not only on local markets, but also on export markets. If you look at the split of investments, besides the years, you will see a split also between buildings and machinery and equipment. Basically, only in equipment, we will change 40%. We will renew 40% of all the equipments we are operating today. So we are gladly looking forward towards next year and finalizing the first two investment objectives, which should bring immediate positive results to the company. And then, of course, continuing with our entire plan for the years to come. We will keep you updated constantly with the evolution of all these investments. Thank you very much.
Thank you all for your questions. Them coming. We will now start the Q&A session. And firstly, we will answer two questions that we have received via email from our investors. The first question is there a stock option plan currently in place?
No, but will be next year.
Thank you. How will the current economic situation influence Cris-Tim's sales and future plans, given the decline in consumption caused by the increase in taxes and VAT?
For the moment, it's very hard to evaluate. If we look at the past 3 months, we see that the market is stable. So the market is not declining in terms of volumes and value. Of course, the rate of growth is very small. We are looking at 1-2% in the past 3 months. If we look at the evolution of the company in the past 3 years, we have always outperformed the evolution of the market. So we are not necessarily stressed or affected by this, because we are targeting, of course, to enter into new product categories, develop new product launches, delivering a more broad spectrum of product range. So as we did in the past 3 years, we are looking more towards starting new projects and eating from our competition's market share. And we've done that successfully in the past 3 years, and we are optimistic as well for next year.
Thank you. We can now move to the questions from the chat. First question is, how do you see the evolution of pork meat price in 2026?
I will answer this. So basically, we are not analysts. We have some experience, but we really cannot tell what's going to happen to the market, especially related to this market. It's very difficult to say, just because we have some events which are not related to operational situation of the provider of products. In the history of the last 10 years, I think we had several times outbreaks of African fever, which changed the course of the market dramatically. So basically, it's very hard to say. What we see now, it's a stable market with a lot of pressure on the farmers, and so far, I think this year was quite a stable market in terms of price. A little bit of lower price, decrease of prices in the end of the year, but this is something normal due to seasonality. So we'll see. We have we didn't decide yet how we will start when we will start to buy raw materials so far. So basically, we are waiting to see what's going to happen in January, February.
Thank you, Răzvan. What updates do you have on the M&A deals that you target? Could we see some materializing in 2026?
Yes, I would say we are optimistic that the company will be able to conclude at least one M&A scenario in 2026. Of course, this will not be part of our official numbers of the budget of next year. It is a work in progress, but we are confident that it can materialize for next year.
And the next question, could you provide more granularity on revenues split on segment, channel, brands, and P&L?
I think that's in the report already.
Yes. So we do provide in the Q3 report, you will see we do have quite a lot of granularity, exactly as mentioned, split of revenues per segment, channel, brands, and also in the financial statements, you will see P&L per segment. So we encourage you to study the report. We can go to the next question. Do you plan to buy 40 to 50% of next year's pork meat needs during the January-February window as per your usual policy?
I think it's always a question of opportunity, but no year is similar to the other. Pricing is an opportunity. We are ready to seize it when it comes. Overall, we expect it to be a stable year. I think that compared to this year, it's possible that we see a slightly smaller overall price of raw materials. So to answer the question, we don't see raw material as being in any way a factor of cost increase next year.
Thank you, Radu. As we look ahead to Q4 and into 2026, how much of this EBITDA margin improvement do you view as repeatable in the future?
Well, if we look historically at the past 3 years, our EBITDA has been quite stable, around 15%. In some of the years, bigger than 15%. The question is that the thing is that our idea and our strategy, of course, is to make sure that, as we have promised to all our investors, also during our presentation of the company, is that this is a EBITDA range where we want to stay. So we never want to go under 15%. Our plan is to always stay between 15 and 70%. But this is, of course, very conditioned on the investment strategy that we have through the Investalim program to be able to achieve the necessary efficiency and cost economies of scale in order to be keeping this EBITDA margin stable. So I would say that yes, 15% is the minimum EBITDA percentage we are looking at for the next few years. And we are very optimistic that we can be above that as we have been this year as well, because this year we have been delivering results better than everything that we have budgeted.
Could you please detail your vision about the evolution of the relative share of brand versus private labels versus traditional trade going forward, both in cold cuts and ready meals?
Yes. Overall, in the past 3 years, we've seen private labels increasing at a higher pace compared to branded products. This is also a result of the mix of retailers developing in the market. We have seen many more discounters coming into the market and developing more aggressively than the other types of retailers. If we look at the evolution of this year, we see that private label has stagnated. It's flat. It's also a question of the quality of products. Not all the times private label is perceived as a quality product. In fact, there's been many occasions where private label quality has been going down, and this is reflected in consumer preference, meaning that it's not growing at this moment. Traditional trade is a channel, of course, that is decreasing every year in terms of share and sales volumes. Again, we have been growing in this channel as well. We have been growing in a channel that's decreasing, slightly decreasing from year to year. So this means that we are eating market share and gaining market share from our competition. I think we will be able to do that in the next year as well. So overall, of course, as we've presented in our business plan, it's for sure that in the next few years, private label will be gaining a higher percentage of our total portfolio of sales. But it will be at a very comfortable level with a very positive margin. So even in our private label portfolio, we are looking towards producing higher quality, higher range products and not in the cheap segments of the market.
Also, comparing cold cuts and ready meals, there is a different dynamic of private label, since ready meals started with private label and then brands started to appear in market. While in cold cuts, first there were brands and then private label. So private label in ready meals decreased in terms of percentage of the market, but it's still very strong and is going to be strong for the future.
Any change in what you see happening to exports going forward?
We see exports as being largely stable in the future period. We are looking towards entering into new partnerships and new contracts. Of course, our objective is to start accessing local international retail markets. This is one of the objectives that we have moving forward, to access local supermarket chains. So export evolution will be slightly positive, but single digit.
And the last question that we have on the chat, if you have any other questions, please type them right now in the chat window. Otherwise, we'll be concluding this teleconference.
So there's no more question.
Yes. How is your outlook for Romania's market demand for the next 5 years?
Difficult to say. I mean, we all know that economically speaking, Romania has been evolving very positively, especially from consumption growth. We see that consumption decreasing now. I think it's temporary. We all know that the government now is working on adjusting the fiscal position of the country. There are going to be some turbulences until our deficits are going to be stabilized. The positive side of things is that there is still a lot of investment going on, especially from European funding. This, in my opinion, will keep the economy afloat next year. And most probably consumption will start continuing to increase more significantly from 2027. All in all, of course, we have to be aware of the fact that demographics in Romania are not looking very well. So we have a population which is flat. So overall consumption in terms of volumes will have very, very small increases in the next few years. I'm very sure that the market will continue to become more and more premium. Consumers are going to look more and more towards high quality products. And most of the company's growth, beside the growth in the segments we are market leaders now, is going to be the entry into new product segments, diversifying our portfolio heavily, and basically attracting a higher and higher number of consumers.
Thank you very much. I believe we have answered all your questions. Thank you all for joining us today. We look forward to reconnecting with you early next year, be it at the end of February 2026 or early March, for a teleconference to discuss our preliminary 2025 results. The exact dates of publishing the report, as well as of the teleconference, will be announced in January 2026, together with the release of the 2026 financial calendar. If you have any questions, please feel free to contact the investor relations team at investors@cris-tim.ro. Thank you all for joining us today, and we wish you a great day ahead.
Thank you.
Thank you.